So Tesla reported earnings last week, and a lot of us know that it wasn't the best earnings, but what exactly did they report, and should you be concerned? What's going on, guys? It's Ricky. So I asked you guys on my Instagram under my close friends channel if you guys would like me to make a video. Enough of you guys showed some support, so here's the video. And all I literally ask you to do is, if it's not too much to ask and you feel like I earned it, please consider dropping a thumbs up and subscribing. So let's go ahead and just jump right into it. So Tesla's Q1 2025 income statement. For those that do not know, you might be like, well, Ricky, we're not in Q1 of 2025. That is correct. Q1 has officially finished. So now these companies report earnings once the entire quarter is complete. And that's what Tesla just reported last week. For those that do not know, Tesla reported Q1 2025 earnings. And again, this was right around April 21st, 2025. Their EPS expectation, which is their earnings per share, was expected to be 42 cents per share. They earned 27 cents. And if you actually look into the breakdown, they actually later had to adjust their EPS, and they still plan to, because they failed to report a $97 million loss that was unrealized in crypto. The reason this was a big red flag is that last quarter, they didn't fail to report the unrealized gain of nearly $1 billion, but that's because Bitcoin was on a bull run. Now, Q1 2025, Bitcoin was on a bear run. It was down 30%. They didn't want to realize or unrealize the loss. So again, very convenient. We'll see if they get in trouble for that. I know a few companies have in the past. When it comes down to revenue, they expected to produce $21 billion in revenue. They reported $19.3 billion. So as you can see, it's a terrible quarter. Year over year growth is down. The company is not growing by any means. And their net revenue was down year over year. So automotive revenue plunged 20% earlier this year. The stock is down 41% this year so far. I don't really care about that statement because it's out of context. So I'll explain that in just a little bit. But the big thing that I want to point out that is important is that net income plummeted 71% to $409 million. From last year, where it was at $1.39 billion. So imagine that. A company is growing from 2020, right? Showing revenue, showing profit. Up until last year, they're still in profit, 1.39 billion a quarter, to now year over year from where they were last year, they're down. They're only up $409 million. So how exactly did they end up at $409 million? Well, that's exactly what this income statement flow is. It breaks down where the revenue was generated and then where the expenses came about. I think some of you guys are going to be surprised. I think it's important that if you ever plan to invest in a company, just to take some time to understand how this company produces revenue and if the company is growing or hurting based off of current market conditions. Just because Tesla might be hurting right now doesn't mean that 5 to 10 years from now, it has to continue to be hurting. We have to be very open-minded. Tesla, of course, has Elon. In my opinion, Elon, again, is one of the greatest minds of our generation. With that being said, although I do like Elon and although I do like Tesla, I have 2 Teslas myself. I recently just purchased one of their Tesla Optimus figure. I'm a big... I like people who work hard, and I like people who earn it. I respect that. This is a terrible earnings report. My appreciation of an individual or a company doesn't have to be so biased that I bow down to them and refuse to acknowledge that it's a terrible quarter and the stock should be plummeting. Like, very simple, right? Let's go ahead and get into this, and then we'll get into more of like the why. So Tesla Q1 2025 income statement, auto sales, $12.9 billion, 21% year over year. Not bad. Regulatory credits. This is, again, something that I wanted to make sure that I explained. 35% year over year. It's a little bit over $500 million. I think the exact amount was like 575 million. Auto, 14 billion, 20% year over year. Overall Tesla revenue, 19.3 billion, 9% year over year. Charging services, 2.6 billion, up 15% year over year. Energy generation and storage services, that's with their solar panel and the way that they store battery, 2.7 billion. This is actually up 67% year over year. That's actually growing a lot quicker than what was expected. Leasing, again, if you ever don't want to buy a vehicle, because we all know that Teslas, again, I own 2 of them, Teslas depreciate like no other vehicle I have ever owned. I don't think I will ever buy a brand new Tesla anymore. I think it makes more sense to lease a Tesla. And first off, and on top of that, if you own a business, you're able to write off the lease payments fully, regardless of the weight of the vehicle. Something to take into consideration. But up 6% year over year, or down 6% year over year, and then $400 million in revenue. So let's go ahead and break this down. So auto sales, the thing that I want to point out is regulatory credits. They made nearly a little bit over $500 million in regulatory credits. And when we get down to their net profit, they made $0.4 billion. So less than $500 million, right? 400 million. Their gross profit is up, it's 16% margins. So gross profit's 3.2 billion. Cost of revenue, so 16.2 billion. So to be able to withstand all of this, this is how much it costs Tesla, 16.2 billion. Operating profit, 400 billion, 2% margins, very low. Interest, so this is how much Tesla can earn off of its cash. I guess supposedly it made $300 million off of interest alone, or maybe interest payments. Net profit, 400 billion. Tax, 200 million. Other, 1 billion. Research and development, 1.4 billion. SG&A, 1.3 billion, and then others 0.1 billion. So the thing that I want to point out very quickly is regulatory credits, because that's a big, head scratcher. You understand how they make money leasing, right? You understand how they make money with energy generation and storage services, charging services, auto sales. That's all common sense, right? But regulatory credits, what exactly does this mean? For those that do not know, Tesla does get regulatory credits, also known as carbon credits or of zero emission. So this means that as long as the company is generating or creating vehicles that produce no emissions, they get credits by the government. Now, some people like to complain about it because obviously it's very favorable for Tesla, but I want to remind you that this was a movement by our government. And Tesla's just doing their part, just like any of us. If we had a business that benefited from this, we would do the same, right? We would take advantage of these credits. The thing that some people don't understand is that they're actually able to sell their credits to companies that need to offset their carbon footprint. So weird, right? So how are they generated? Tesla earns regulatory credits by selling electric vehicles, which are considered zero emission or to have very low emission. How are they used? Automakers who fail to meet emission targets can purchase these credits from Tesla to comply with regulation. Because again, if they do not comply, then they get fined. So again, who is buying most of these regulatory credits from Tesla? So pretty much the manufacturer of Fiat Chrysler Automotives and PSA Group is a major buyer of Tesla regulatory credits. They have purchased a significant amount of credits from Tesla to help meet emission standards. Again, if they do not do this, then they will get fined. So supposedly to them, it's cheaper to actually just pay the price, pay Tesla, and buy it off of them because Tesla gets so many because they produce zero emission vehicles, EVs, right? Again, we can complain about this. You can be like, well, Tesla wouldn't be profitable as a business without this. It is what it is. Tesla is working with what it's given. It is a true statement that, well, if Tesla did not sell or have the ability to sell these credits, they would not have been in profit. Something to take into consideration, right? Tesla's business as a whole is profitable, yes, because it's able to sell its regulatory credits. It's almost a way that it can kind of like hedge. Anytime that it gets kind of close to not being in profit, they just have to sell more regulatory credits. But someone has to be willing to buy them, right? Something that I think maybe not a lot of people are aware of. So again, if a car manufacturer does not meet the standard or expectation from regulators, they can buy these credits from Tesla to meet regulation, to offset their carbon footprint. Pretty interesting concept, right? When it comes down to why Tesla is struggling. So again, total revenue slid 9% from $21 billion last year, and it dropped 20% to $14 billion from 17.4. So why is overall revenue down? So if you jumped on to their earnings call, right? So when a company reports earnings, their earnings report comes out. That's when we learn about their earnings per share and their revenue versus what was expected. But then normally like about an hour and a half after, there's an earnings call where their executives and Elon comes on, and then they talk about kind of what happened, right? Maybe guidance for what's to come. And during that call, they talked about the impacts of tariffs on how prices have gone up. And then they also talked about the impact due to the backlash of Elon being affiliated with Trump, how it's had, obviously a negative effect to Tesla. There's no reason to excuse it. You can say, this is what Tesla deserves. Again, I want to be unbiased when it comes down to this. It did impact it. Now, is this a long-term impact? I do believe people moving forward, there are some people that have so much hate for Elon, regardless of what their reason is, they just will never buy a Tesla again. And that's okay. That's up to that. I don't know if Elon can do something about it to kind of change their mind or convince them. But that is the world that we live in as of right now. People were fed up. People wanted to stick it to Elon. And to some degree, they did it successfully. I don't agree with it. I have 2 Tesla vehicles myself. I don't understand how Tesla or Elon in any way is viewed as a Nazi or anything like that, but I don't have to see eye to eye with them. It's just we have to respect kind of like what it is, and that's the reality that we live in. There is a negative sentiment, as at least right now, that's very profound against Tesla and Elon, and it has had a negative impact on sales, because I know that myself, if at one point, my family, they drive a Tesla, and it's a very safe vehicle. I feel very safe driving it. It's historically, speaking, it's been tested, and it's a very safe vehicle. That's why we drive it. But yeah, it did get me to ask the question, well, what if we get attacked? Should I be concerned? Obviously, I'm going to do my part in protecting my family, and that's always been a focus that I've had. So I live in the state of Arizona. My form of protection might be different if you live in the state of California, right? With that being said, I can reassure you that if people were on edge to possibly want to buy a Tesla, all the attacks that were happening against Tesla owners would have pushed them to not buy a Tesla. So their overall automotive revenue being down 20% does not surprise me. That's very common sense because of the negative sentiment and the backlash that followed with the Tesla attacks. Now, is this short-lived? Maybe, but I do believe long-term there will be people that will never buy a Tesla again because they hate Elon. So we have to acknowledge the negative impact and toll that this has had to Tesla. Net income plummeted 71%. This is the part that I believe is the most concerning. This is kind of the red flag for me when it comes down to Tesla. Net income being down 71% and their overall income being $409 million. We're not seeing Tesla grow as a company anymore. We're seeing their margins begin to slim. If I'm not mistaken, for their average vehicle sold in 2024, they made a little bit over $5,000 profit per vehicle. That's what it broke down to. So there's only so many moving levers that Tesla and Elon can adjust to incentivize buyers. They did a model refresh, so rightfully so. Their Tesla Model Y and Tesla Model 3 are one of the best-selling vehicles in America. If I'm not mistaken, the best-selling EV, and this is for multiple years, right? So when you ever hear the dig of who would ever buy a Tesla, well, I guess a lot of people, because it's still one of the best-selling EV vehicles. Now, it used to be one of the best-selling vehicles, period, not EV included. I think that was back in 2023 or 2022. Nonetheless, it's still one of the best-selling vehicles in 2024 and possibly in the works for 2025. They did a revamp and they lowered their prices, but there's only so much Tesla can do to still stay in profit. They can try to offer them lower interest rates, and they work with banks in effort to do so. I know I've seen them try to offer that, or a lower APR in comparison to all the other automakers, because that is a big concern for a lot of consumers right now, is that interest rates are incredibly high. And if we pay attention to the most recent Fed rate monitor tool, based off of the next FOMC meeting that's supposed to be on May 7th, the Federal Reserve is not expected to cut interest rates. There's a 91% probability that the Federal Reserve is going to pause and a 8.2% probability that the Federal Reserve is going to cut. So very low probability that the Federal Reserve is going to cut. You might be like, well, Ricky, why do we care about that? Very simple. Because they're not able to lower their prices anymore, realistically, because they have to be a profitable company and it costs money to make their vehicle. They have about $5,000 to work with. If their cost of goods are going up, especially with this trade war and tariff war that's going on with China, I think this is a big reason. If you guys paid attention, this just baffles me that Tesla didn't react in a negative way, is that seeing all the red flags of this company not growing with its core business year over year, knowing that China and this trade war, if it continues to sustain itself, it's going to cost every automaker more, even for just the raw materials, even though Teslas are produced and made in the US. Let's be honest, where are most of their products or the raw materials probably imported from? Therefore, if their cost of materials go up, then their margins slim down, right? If interest rates for consumers to be able to borrow against are not going down, then again, there's less of an incentive for the average consumer to want to buy a Tesla because it's more expensive at a higher interest rate to buy a Tesla. So then all these different moving levers that Elon was able to work with before are no longer present. Their net profit are slimming, their costs are beginning to go up, and interest rates are still high. And to wrap that all in a very pretty bow of people hate Elon more now than ever before. Now you can see why there's concern, why there's red flags with Tesla right now. A lot of people like to talk about the robotaxi. I've made numerous videos highlighting that. Their robotaxi is supposed to launch. First off, if you're talking about it now that's the reason that you're investing into Tesla, Elon first introduced the robotaxi idea nearly 10 years ago, back in 2015. Yes, finally in Austin, Texas, June 2025, they're expected to launch in an area where Waymo has been in service for the past 3 years. So there's nothing new there. It's not like Tesla's going to flip a switch and now every vehicle that everyone drives is now going to be full, unsupervised, autonomous vehicles. That's not realistic. There's regulation, and they need to show that they can deliver a safe product. Tesla, if you own a Tesla, speak for yourself. You know that you've been in a Tesla, or even if you have the newest version, as I do, of the full supervised self-driving, there's times that things get kind of close. Where now if every Tesla was full supervised, unsupervised autonomy, we know that as of right now, based off of what we're working with, it wouldn't be a safe roadway. And now imagine if accidents begin to stack up. The regulation will begin to go against Tesla and the ability for these automakers to make autonomous vehicles because maybe, again, the idea of delivering a safe product just isn't there, setting back Tesla and maybe other autonomous vehicle developers or manufacturers back further when it comes down to the timeline. So again, they've also talked about their Optimus robot. They introduced that over 5 years ago. There's no development in that before. The thing that people are tired of is these empty promises that Elon continues to make. He's talked about the autonomous vehicles for the past 10 years. And yes, they will finally be launching in Austin, Texas in June of 2025 in a very secluded, in a very specific area, just like Waymo. It's not just now everyone has full autonomy. It's they have to meet regulation and then they will expand. And if there are accidents, then again, it will set them back months or maybe even years. We have to understand that this is a process. People think that the robotaxi was just going to happen next year. And I think this is where hope begins to cloud your thinking. You have to understand the timeline. And I do believe if you can tolerate the time that it might take for this to all play out, then yeah, maybe it will pay off. But in the short term, I would not be surprised based off of what we just talked about how Tesla is actually doing as a company fundamentally, as you guys can all see, their net margins, their net profit, their year-over-year growth, their core business of selling vehicles is not more profitable now than what it was. Year over year, the revenue is down 71%. So how can you say, well, no, the common reminder people have is, well, Tesla already pulled on back and this is already factored in. Timothy, I think you're confused, right? And I want to remind you, I mean, I obviously pay attention to the market every day. The only reason Tesla skyrocketed was because Trump and Elon were affiliated. If you paid attention before November 5th was when Trump was viewed as the president-elect. That's when Tesla began to skyrocket. And then Elon was a big supporter of Trump and was viewed as being affiliated with him. At that point, it was expected that, okay, Elon was going to get preferred treatment. Then that was definitely not the case. That's the only reason Tesla skyrocketed. There was nothing fundamentally that changed about the company. If you guys remember, Tesla was trading from highs of 270 to lows of 240 before this 100% rally. So Tesla were selling off back down to exactly that same price level that it was at last year shows one thing. Tesla is less profitable now on this quarter than what it was last quarter, Q4 of 2024. There's less growth, there's less revenue, there's more of a negative sentiment. So this retracement is not that it's already priced in, is that it never belonged up there. So when you guys saw all the videos that I was making when Tesla was pushing above $400 per share of, hey, there's nothing fundamentally new about this company to support this price level. Everyone ignored it. They laughed, like Tesla's going to $1,000. Why? Because of the weather? Tesla doesn't belong at $400. And quite frankly, Tesla doesn't belong at $285 right now. It is a struggling car company. And for those that say, well, it's not just the car company, I agree. Because if you take every car company that's publicly traded and you combine its market cap value, Tesla is worth or valued more than all of them. So you are right. If Tesla was valued at just the car company, it would be immensely overvalued because even then, its car business isn't growing year over year. It has no robo-taxis and it has no Optimus robot. So again, my simple question to ask you is, well, then exactly what are we pricing in? Because if we pay attention to where Tesla is trading at right now, Tesla is trading at 150 times its earnings. And I know for people that are watching this, you might be like, okay, well, if you understand PE ratios, you would understand that Tesla normally doesn't trade off of value or fundamentals. I agree. And that's why Tesla rips up 100% and then crashes 50%. It rips up and then crashes again. It rips up and crashes again. A lot of people often like to comment, you never want to bet against Elon. Well, quite frankly, I think that's a pretty dumb comment because if you date back since 2021 or late 2021, early 2022, from the price level that we are right now, Tesla is down. So technically speaking, you would have made more money shorting Tesla in the past 4 years than investing into it. Now, don't get me wrong, there's retracements. It has had support right around 140, 150, $200 price per share. But now more than ever, fundamentally, Tesla is struggling. Elon is set to come back. Another reason a lot of people like to excuse that the market or Tesla rallied 28% in 4 days. Everyone knew that Elon was limited to 130 days with the DOGE. Everyone knew. So him coming back to Tesla is not a surprise. It should have been priced in already. The only reason Tesla went up is because the entire market went up based off of hopeful negotiations between China and the US, which still hasn't been announced. But technically speaking, the stock market is a leading market. It often gets ahead of itself. So as long as things are not getting worse, then technically they're getting better. So that is the way that the market justifies the recovery. But now we're learning more that there is no negotiation. So this is where we can begin to see retracement. So let me summarize this very quickly. We've already talked about how Tesla is struggling fundamentally as a company, how it's overvalued based off of its P/E ratio. And the only reason that it actually began to go up was because of the market recovering, therefore giving Tesla the environment to recover as well. If the entire market begins to fall apart due to trade war or uncertainty, Tesla, more than any other company out there, will sell off more aggressively because it's more overvalued. The more overvalued a company is during a downturn, the harder the corrections are. I would not be surprised. And this is 100% just my opinion. So please don't get personally offended by it. I would not be surprised if Tesla begins to trade eventually below $200 per share. Don't get me wrong. In the short term, can Tesla pump up aggressively? Of course, anything can happen. We've seen it many times before where Tesla can skyrocket 100% off of no fundamentals, but just based off of hope. So it would be very naive for me to say that Tesla can't pump. But I'm talking about if you're trying to invest in Tesla, then I don't think 280 makes a lot of sense. I think that there is more downturn to come because fundamentally Tesla is overvalued based off of what it's currently producing, and it's running out of time. It can't control interest rates. It can't control trade war, and its net margins are slimming and demand is falling as well. So again, what exactly are you investing in when you have a company in an EV space losing market share, negative sentiment, and not growing year over year? The rest is something that maybe you can answer yourself. I would love to invest in Tesla maybe when it gets closer to $100 per share. I think that there's a lot of internal changes that need to happen. And we'll see in the next few quarters how things continue to develop. But again, if overall sentiment resumes to be bullish, if the Federal Reserve gives in and begins to cut interest rates aggressively, if the trade war begins to simmer down and China and the US can begin to negotiate, then yeah, that could allow the markets to begin to recover, therefore giving Tesla the environment to recover as well. That would be Tesla's best case scenario, allowing it to kind of fall through the cracks and making its way out as markets recover. But if things get worse for the entire market, then things will get very bad for Tesla, more now than ever before. So I appreciate your time. I hope that you guys enjoyed my breakdown. I would love to make more videos like this. If you guys enjoyed it, please consider dropping a thumbs up, subscribing to the channel. And again, I do trade live every morning. I work with my LPP team. So if you like the way that I break things down, I think that you'll enjoy those live sessions. And that's the second link in the description down below. Appreciate your time. Like always, let's make sure that we end the year on a green note. Take care, team.